Good day, ladies and gentlemen. Precious metals got eviscerated over the passing week. Today is June 19th, 2021, and I'm going to discuss gold only. On a weekly basis, gold closed at $1,764, losing 6%. For the past 2 years, gold has been trading above the major rising trend line, which was tested 4 times. Even with the most recent sell-off in gold price, the metal is still trading above the major trend line. Therefore, we can conclude that no damage so far has been done to the long-term trend line, which is a positive sign. Now, let's zoom in into a daily chart. As you can see, gold made a low on November 30th, 2020, falling as low as $1,764, following which it had a strong rebound all the way until $1,960 level, where it topped and started one of the biggest corrections in 2021. The gold managed to make a solid double bottom by March end and started another cycle higher. When gold approached $1,900 level, I issued a video, Crowded Trade in Gold Requires Correction. I assumed that $1,850 level was a good support, but didn't rule out gold falling as low as $1,800 level. Gold in reality pushed all the limits, closing at $1,764. Once gold started to break $1,800 level, it became apparent that the precious metal might be forming an inverse head and shoulder pattern. The November 30th, 2020 low at $1,764 is a left shoulder. A double bottom in March 2021 is ahead of the pattern. And it looks like that presently gold is forming the right shoulder. In my opinion, gold is largely done with the correction and should hold and reverse from the present levels. I cannot rule out gold declining further to $1,750 level, but that should be as much as gold should fall and start a very quick reversal. I believe that advance should start early next week and catch everyone by surprise. My standing target of $1,950, $1,975 in place. If gold doesn't hold at present levels, then it has to be re-evaluated, and I will issue a new video if such scenario materializes. But if we step back and ask a question, why did gold sell off so violently? I believe it was an overreaction to Fed's statement that it might hike rates by the end of 2023 just by 0.5%. While inflation is highest since 2008, reaching 5%, and short-term interest rates at the moment near zero level, investors are concerned with what Fed might do in 2 years. I wonder how Fed is going to fight a 5% inflation by hiking rates to 0.5% after 2 years. As for me, sell-off in gold was an emotional overreaction. In fact, I doubt that Fed will ever hike rates on the exploding national debt, which presently stands at $28.4 trillion and is likely to reach $35 trillion within 2 years. The Federal Reserve continues to hope that inflation doesn't go out of control because it is not capable of hiking rates on ever-increasing US national debt. Therefore, I believe logic should take over emotions and gold should start rebound already next week. This is it for today. Please like and subscribe if you enjoy the content on this channel. And note that this video is not an investment advice and prepared solely for educational purposes.